Hello everyone, welcome back once again to my channel. As you can see, I was starting a new working strategy. Actually, every strategy, if you stick to it, they will work, but due to the winning rate, or maybe the time, or any confluences made to trade, you have to choose the simple one and stick to it. So in this video again, I'm going to show you how amazingly the Fibonacci retracements works on any excuse me, any kinds of trade. So as you can see, I was testing and also using this method. So before that, what's really Fibonacci is, in my previous video I try to suggest you what books you want to read to master this method. So it's simple. There are more than 3 or 5 confluences, and you also take 3 or 2, not less than 3. Actually, there is 2 indicators you may use for I'm sorry, for the entry confirmations, which is MA, moving average, and also RSI. You can use 2 indicators for the entry confluences, but that's for beginners level. For an advanced one, you can maybe you better stop using the indicator. So here we go. I'm going to analyze how this is working. So as you can see, this is a 30 minutes time frame of Bitcoin, BTCSD. So in this video, I'm going to test this graph using the method of Fibonacci theory, Fibonacci retracement. So if you want to know the detail about Fibonacci, how to use it, maybe in other videos, we're gonna come back and see how it works. So today I'm going to just draw the Fibonacci retracement to this one. So first of all, what I have to do is I have to check whether the market is trending high or trending low, or going to side. So in the current situation, Bitcoin on higher time frame is going side, but as you can see, this is trending down, which is we have to looking for sales up to this area. So before that, we have to identify the high and the low of the swings of daily. So in your mind, you have to take this concept very important, because the higher time frame alignment must be go with the lower time frame alignment. So So the higher time frame is, if you check the weekly one, you can see the weekly is in ranging, but in that range you could have the chance to sell for a short period of time. So going to 30-minute, we have to identify the lower swing and higher swing. That's what matters before anything. Before we can do anything, we have to identify the longer movement. We have to put our focus on the longer movement of the chart. So from here we can see this is the very aggressive movement, and also here we have an aggressive movement. So after choosing any aggressive movement, we can say there is a swing high and a swing low. So in this case, let us test this graph, this analysis from swing high to swing low. So in this case we have here the swing high and the swing low. Alright, so from the swing high to the swing low, we have here a break of structure. This is a break of structure, right? You can see this is break of structure. So we have here the swing high and also here swing low. So after marking the swing high and the swing low and break of structure, we're gonna make sure that we draw our Fibonacci retracement tool. The rule says if the market is trending down, we have to mark from higher to the lower level. See? So as I said in earlier video, maybe the setting for your Fibonacci is a little bit messy, but you can copy mine and use it on your own. So what is Fibonacci, and where we look for the trade, to where is our entry? So the rule says on the Fibonacci we will have to make sure looking the trade on the three levels, most probably on the golden zone, which is 61.8 is the golden zone of the Fibonacci retracement. So from this golden zone we will have to enter, right? We enter a trade and we put our stop loss above the next level, which is 78.6%. so here is how you take the trade, and it is completely almost a sniper entry here. I will show you another example. You have to put your stop loss here on the 78.6. so the win rate is 3.7, as you can see. It is good. So here is the very easy setups you can have on your mind, and you can use for a lifetime setup, marking the swing high, the swing low, and drawing the retracements from high to low if trending down, and marking in vice versa if the market is trending up. So let's continue. Another one, this is aggressive movement. So in this aggressive movement we have to mark from swing high to the swing low, and here, from the swing high to the swing low, and our entry is 68. Let me delete this one. So from text 1.8, and our stop loss will always be here. This is a very good setup for entry. So here is another smashed entry, and you can also, we can look also for another setup here. This is trending up, so we will draw from lower to higher. This is higher. Before the market going down, we mark the lower and the higher, right? The higher is here, here is the higher. So our entry will be on 61.8, and our stop loss will be here. And it's again a smashed setup. So let's continue to analyze the chart. So here we have another good setup. So here we have a break of structure. Before break of structure, we have an aggressive movement to downside. Before aggressive movement, you can also trade between this one, but for looking for a longer setups. This is the break of structure. So from high to low, this is the swing low. Okay, we have to mark this as a swing low. So in previous video I have told you the confluences to look before entry. There will be a kind of this one, okay, but also we have an order block around here, so we mark an order block entry from here. So your stop loss will be at 100 when you enter at 78.6. okay, so during the during the high volatility of the market, we have to wait the market to retrace to our position before entry. So in this case we will able to manage the risk ratio of 3.6. Also we have another type of entry in here. So let's test it from swing low to the swing high. We put it, and here our entry is here, because we can say our entry, we can take our entry from an order block, right? You have to mark the order block, okay, here. This is a very simple method. As you can see, we have a high winning rate still now, and also you could have take this as a low and high, and you can take this one also from the swing high, the swing low, this the lowest level, and the higher one, okay, the higher. So it came back, and before it came back, as I told you, we have to make sure that we mark our order block, because that's where we enter the trade. Okay, the order block might be around 78 or 61, so make sure to mark the order block before getting into entry. So our entry will be here, and our stop loss is automatically here, and we have a good winning rate still. So the other one is you can also have a very an important setup in 4-hour time frame. By the way, in 4-hour time frame, you can see a very important trades that you have to take. So that's the case for time being. This is how you can enter and take a trade from using Fibonacci theory. So for more understanding, make sure to read the Fibonacci trading, how to master it. That book will clearly show you how to enter a trade. For example, this on our higher time frame, on 4-hour, if you draw the swing high to the swing low here, okay, swing low, you have a very good entry at 61.8 and marking your stop loss here, and a very good trade. So it works on all time frame. You just have to focus first and do the rest. So thank you for being with me, and if you are new to the channel, please don't forget to subscribe. Have a good day.